Hi, we're sitting today with Ayhan Kose, who is the World Bank Chief Economist for Equitable Growth, Finance and Institutions, as well as being the Director for the Prospects Group. Welcome.
Thank you.
So you cover a lot of space, and I'm wondering how what you cover is how that conversation is manifesting right now in the IMF World Bank meetings. What are you hearing and what's your main focus right now?
So we cover global macro, we cover finance, trade, governance issues, poverty.
Just that, that's all?
So there's a lot of things under the sun we try to think through from the perspective of emerging market developing economies. Obviously, global economy is going through a very difficult period. And when we think about the discussions around the possibility of a global recession, discussions, possibility of a debt crisis, and all of these taking place against the background of a war in Europe and very serious pressing climate challenges and food insecurity. Of course, these are the topics we are discussing with our members and trying to think through, what are the solutions, how we can as an institution help them.
So, this is a lot of compounding issues that you just described, and the IMF Outlook is fairly bleak right now. And so I'm wondering how you are seeing this moving forward. What do you think is going to happen given this bleak outlook and given all the different things that the emerging markets that you work in are facing right now?
So indeed, the outlook is quite bleak. We released a study thinking about the possibility of a global recession next year. When you look around the world, global activity is slowing at a much sharper pace than it did prior to the previous global recessions. The last two was 2020 global recession and 2009. Global policymakers reacted to these global recessions, 2009 and 2020, aggressively, provided policy support on the monetary policy side, on the fiscal policy side. This time, unfortunately, the slowdown in activity is coming along with very high inflation and unfortunately still rising inflation. So policymakers on the monetary policy side need to tighten financing conditions, meaning that they need to increase interest rates. On the fiscal policy side, fiscal space is limited, debt levels are quite high, deficit levels are quite high. There is not much space to react. And fiscal policy has to complement monetary policy. So we are getting into a period, the last time we had in the early 1980s, that triggered the 1982 global recession, of course, a string of debt crises. From the perspective of the bank, we understand the possibility of these crises. We are having this robust dialogue with our members, how to prepare, what types of policies are needed. And of course, on the monetary policy side, they need to be determined, credible. On the fiscal policy side, they need to implement policies to target the most vulnerable segments of the society and help them as much as possible. Now, global community also needs to work harder to have a well-defined, timely, and of course, equitably shared distribution of these debt challenges, a robust framework. And unfortunately, as much as we are getting into the 2023, we are worried about the possibility of, debt crisis in low-income countries, in some frontier markets. Still, we do not have a well-defined framework to restructure debt. And that is an important issue we are trying to push the agenda forward.
And so you outlined what you see as policies that will be able to mitigate some of the impacts. And I'm wondering if you're seeing these moving forward. Are you seeing the tightening or a receptivity to tightening some of the fiscal policies? And are you seeing a receptivity to some policies that will create a more equitable distribution?
There is definitely reception. And I think that there is understanding of what needs to be done. The unfortunate truth is that We had a long period of accommodative monetary policies. Now those policies are being withdrawn, and naturally there is pain associated with that. Policymakers have a good sense of the importance of price stability, the need to stabilize inflation. Because if you have inflation at elevated levels, it is difficult to have macroeconomic stability. And inflation is something actually hits the lowest income segments of the society the most. So I think there is palpable anxiety whether the inflation challenge is persistent and whether central banks around the world do the necessary to reduce inflation over the next 12 months to acceptable levels. On the fiscal policy side, in many countries, we see limited ability to implement fiscal policy. And there is need to have clear medium-term plans that articulate what the government is going to do to address the challenges related to elevated deficits and elevated debt levels. While at the same time, obviously, global growth is slowing, global trade is slowing, financing conditions getting tighter. And if you are an emerging market economy, if you're a frontier, if you're a low-income country, external environment is becoming increasingly unfriendly. You need to get ready. Basically, things are going to get worse before they get better.
And as a lot of the emerging markets that you deal with are starting to hit a lot of these hard times, I know there's a lot of tension brewing between the industrialized and developing countries. And it feels like with the food insecurity that and climate change, these are things that are hitting a lot of the emerging markets more strongly, and they're viewing support not being sufficient coming in from developed markets. And so this tension has been increasing. I see it a lot in the climate space where I work. And I'm wondering where you see this going, where you might see the outcome of this tension manifesting, if you do even see it manifesting anywhere.
That's for sure. I mean, the tension is there. And to some extent, it is difficult to avoid that tension. Some of these challenges we are facing, take food insecurity, take climate, geopolitical tensions, will require global community working together. And in some cases, you have countries, they just simply do not have the capacity to address food-related challenges, climate-related challenges, and global community needs to find a way to move forward. The World Bank is trying to provide the necessary financing as well as, of course, policy advice. We have our teams on the ground. And recently we released a very comprehensive crisis response roadmap articulating how we are going to respond and how we are basically increasing the amount of financing available for our members to cope with these crises. At the same time, it is very clear advanced economies, the developed economies need to come forward and find ways to address the concerns raised by developing economies, especially low-income countries. There's one thing we know, whatever these problems are, they are not local problems, and they will not remain local. Climate is a global challenge. We are not going to solve the climate problem in Germany or in the United States or in Mozambique. We need to think about how we are going to solve the problem universally, and a global challenge will require a global solution. And there, we have the annual meetings of the World Bank and the IMF. These are the issues we are discussing.
And part of these solutions include finance. And I know that's part, as chief economist, finance is inside of your purview. And there's been a lot of calls for a change in how finance is delivered, right? Increased concessionality, more finance, et cetera, and also leveraging the private sector. And so I'm wondering, as you're talking about solutions and the way that we might ameliorate a lot of the issues, how are you seeing finance evolving, both in the public sphere and also bringing in private sector finance?
So the financing issue has obviously some short-term challenges and the medium-term challenges. Let me first talk about the short-term challenges. The truth is that clients, the member countries, are worried about the tightening financing conditions. It was easy to borrow from international financial markets. Increasingly, it's difficult and more expensive. So, given the debt levels are high, a number of countries in debt distress, low-income countries, frontier markets, we need to find a way to help them. That starts with having a well-defined framework to address the near-term debt challenges and make sure these countries have the necessary help to move forward, overcome the debt problem. The last time these problems took place in the 1980s, the road was very long. It was a lost decade for Latin American countries. It was multiple lost decades for low-income countries. In the near term, we would like to overcome that problem and restructure that as quick as possible. Now, the medium to long term, there are broader financing challenges. When we think about the climate issue, we need to make a significant push, infrastructure push, that will translate into green investments, that will help these economies adapt, as well as have the ways to mitigate the impact of climate change. The numbers are quite scary, what is needed. So obviously, what we need to do on the ground, provide the financing as much as possible, de-risk the projects, bring the private sector and facilitate transactions as much as we can so we can push the envelope further. And that's exactly what we are trying to do. The big question you might ask, is it sufficient? The answer is no, it is not sufficient. That's why global community has to show willingness, consensus, and at the same time, the truth is financing to address these problems. But as I said, we have robust conversations with our members to push the envelope forward, and I am optimistic that these problems will have solutions. Those solutions might not come tomorrow, but obviously they have to come sooner than later.
Ayhan Kose, thank you so much for joining us. It's been a pleasure to talk with you.
Thank you.